Price of silver has reached a 14-year high as central banks are stockpiling gold at record levels. Hi, this is Charles Kelly, Money Tips. Welcome back. I'm sorry I missed an episode last week, but I was traveling. For those of you who do follow me on a regular basis, I very rarely miss an episode, but it was unavoidable last week. As I said, I want to talk about a few things today. I want to talk about the gold and silver prices, the gold to silver ratio, the fact that central banks are stockpiling it at record levels, and also the fact that gold has overtaken the euro as the second most used reserve currency amongst central banks. I'll talk about the World Bank forecast, Rachel Reeves' big spending spree, and lots of other things today. So let's start with silver, and perhaps I can share a screen here and show you what is happening to the silver price. Okay, you should be able to see the silver price here, priced in pounds. It's over $30 in dollars, of course, but you can see here that this is looking at a 6-month change, up nearly 10% on 6 months. Quite volatile silver. It does jump up and down a bit, but many investors feel that, I'll just go to dollars here, that silver is undervalued. Silver, of course, unlike gold, has many more industrial uses, and is especially used in batteries, electric batteries, and that sort of thing as well. It's a very useful conductor of electricity. $36 an ounce. Now that's showing a higher, you notice here, this is showing a higher percentage change on 6 months. It's not the price of silver that's different from the change in pounds, it's the currency. So if you go back to British pounds, the currency fluctuations, well, it's just updated at 10% here. But you can go back over a year. I mean, sometimes of the year you'll see silver up by 18-20%. Sometimes it's 30%. At the moment, it's showing that it's up by 17% on the year. Let's look at over 10 years. I was certainly buying gold very, very cheaply about 10 years ago, and I sold it, unfortunately. But look, 161% over 10 years. And there is a measurement called the gold to silver ratio. And I remember when I was buying silver, it was around 61, which means it's 61. The price of silver, the price of gold is 61 times the price of silver. And at the moment, the ratio is around 93%. It has been 100 times, not percent, 100 times, but it's now 93 to 1, meaning that approximately it takes 93 ounces of silver to equal the price of 1 ounce of gold. And the ratio is used to decide whether the silver is undervalued. Basically, the higher the ratio, the more undervalued silver is compared to gold. Some of this is down to the fact that gold has been surging in price and leaving silver behind. But definitely silver does seem to be undervalued, especially in comparison to gold. So a low ratio, if it's below 50, would suggest that gold is relatively cheap to silver, but a high ratio over 80 suggests that gold is relatively expensive compared to silver. Now, some gold and silver buffs will sell gold and buy silver when the ratio changes. I don't tend to do that. I hold silver and gold, but I don't trade in it. But you can trade, and we can look at the gold price here. Up 2% on a week. 3 months. We'll check the price here on 3 months. You can see gold is up 11.69% on 3 months. It has threatened to break through to higher levels, and in dollar terms, a lot of people are predicting, a lot of investors are predicting that gold will break through the $5,000 barrier. Well, you can see here it's been a little bit higher than that, but $3,400, and they say in the next year or two it could break into $5,000 an ounce. And we had quite a good year on gold. At one time it was up by 40% on the year. Now look, the year changed 47%, almost 50% on the year. We go back a bit further if you like. 3 years, 82% over 3 years. You can see it's been a sort of an almost unstoppable rise over 3 years, and I think part of this is just the fact that more central banks are buying gold. Perhaps the confidence has fallen in fiat currencies like the dollar. We've had stock markets up and down. So gold has been a pretty good bet, 100% over 5 years, doubled your money over 5 years. And it makes me think I should have bought more. It's always the same. Now, should you be holding gold for investment purposes? Well, I think you should hold a percentage of gold or silver and maybe a bit of both as part of your overall portfolio. I'm not suggesting put all your money into gold or silver. It can be volatile, but generally speaking, gold has been a very good investment over centuries, and it's a good store of value. So the price of gold should hold over time. And if you think about the price of gold, if you look back, say, 100 years and see what gold would have bought you, one measurement is a tailored suit at Savile Row. An ounce of gold would have bought you that. Well, an ounce of gold today, 2,600. You'd possibly get a tailored suit at Savile Row for that amount of money. You could certainly get a tailored suit somewhere, but you can see how it's held its value. But the cost of a tailored suit in pounds at that time, I don't know what it would have been, say £50. £50 now would not buy you a tailored suit, it'd barely buy you a good shirt. So you can see how gold has held its value. And this is why central banks like it. And this is why it's overtaken the euro as the preferred reserve currency, particularly banks in Turkey, China, and India. A lot of the BRICS countries, these Brazil, Russia, India, China, and South Africa have been stockpiling gold, possibly to launch a gold-backed currency. And so lots of things have been happening. But yeah, I believe, and I say this in my course, in my smart money course, that gold and silver is certainly a strategy. It's certainly worth holding. How can you hold gold and silver? Well, there's various ways. You can just buy coins, you can buy bars. Obviously, if you buy a 1 ounce coin, that will cost $3,000, or was it £2,600? 2,490, sorry, £2,500. It's just jumped again. So as you can see today, if you actually look live prices, today it's been jumping up. It's up 2.39% in the day, which is remarkable. So yeah, you can buy gold coins, you can buy them from bullion dealers, you can buy them from the Royal Mint and hold them, or you can buy bars. If you've got a little bit more money, you can buy bars. I think it's up to you, how you want to do it. But coins are a little bit more readily saleable, I would have thought, than bars. You can also buy ETFs, which hold gold. I've done a little bit of that in the past. I prefer to hold the real thing. And you can also buy shares in gold miners, although that's a bit more risky. But in theory, gold miners should benefit from a rising gold price. But it doesn't always work like that. I've held some mining shares and silver mine shares, and they've tanked. They haven't done very well. Fortunately, I'm not putting a lot of money into them, but I'm holding on to them. I think they will come back again. But gold miners haven't done that badly. Big mining firms, commodity companies. So there's various ways of holding it. I cover more of this in my course, my smart money course. I'll put a link up to that. But that course covers a lot of different things. It covers gold, stock market, property, and other types of investments, as well as managing your money. I want to talk about now that the World Bank forecast. You may have heard on the headlines that the World Bank have cut the global forecast as trade tensions heighten uncertainty, according to Reuters here. And they've downgraded just about everybody from the UK to America. They're saying that global inflation is expected to reach 2.9%. We've certainly seen inflation go up in most countries. So they've cut their forecast. Most people don't take a lot of notice about this unless you're a fund manager, a government, of course. But they have interestingly said that China will be okay. I wonder why that is. They're very favorable of China, but very unfavorable towards Trump and that sort of government compared to, say, China. But there you go. You can look that up yourself. It's obviously not looking great for the world economy, but they're saying that it will be the slowest decade since the 1960s. And incidentally, that 1960s figure sort of almost coincides with gold and the fact that banks used to hold much more gold back in the 1960s. So I think that's something to sort of keep in the background of your mind there. But obviously, this is large economy. You've got to look after your own economy and do your own thing to make sure you are okay. But what it's saying is that things don't look that great ahead in the next year or two in terms of world economy. And you might think, well, what's the difference between 1% growth and 2% growth? Well, actually, it's quite a bit. It represents billions, if not trillions. And obviously, in the developing world, like where I've been recently in Malaysia and Southeast Asia in general, they look at 4 and 5% annual growth compared to the UK, which is expected to grow just over 1%. In fact, it's the UK economy has dropped in the last April. That says UK economy shrink sharply in April, casting doubt on Labour's growth-funded spending plans. UK economy suffered its sharpest monthly contraction in 18 months, with tax hikes, Donald Trump's tariffs, businesses leaving. These are figures released by the ONS, Office for National Statistics. So, that's only on a month basis, but the economy might limp along and make 0.5%, 1% over a year, whereas in Southeast Asia, it's racing ahead at 4 and 5%. And that brings me back to UK economy and Rachel Reeves. You may have read that she's announced several big spending plans, billions in spending. I won't go through all the details, but they're just saying, well, there's a few billion here for education, billion here, and 30 billion here, and net zero, and all this sort of stuff. They're throwing money around like it's confetti. And it's interesting. I've showed you the stories. It's interesting how each news channel looks at the story. And Sky News says, sting in the tail, tax rise revealed in Chancellor's spending plans. The BBC, very favourable, of course, to Rachel Reeves. Rachel Reeves boosts NHS and housing as some budget squeezed. No mention of possible tax rises, changes to inheritance tax, and goodness knows what else. But of course, that's what you expect from the BBC. The Bicester Advertiser, I don't know why that's there. The Bicester Advertiser, that's where the outlet is near Oxford. Rachel Reeves fails to rule out future tax rises as economy shrinks. Well, that is true. And initially, when she did her budget last year, the one that has sort of almost put the economy into a nosedive, she said, we're not going to raise any more taxes. But of course, they will do because they have to. And look, Times says Rachel Reeves needs a serious plan for public sector reform. So, yeah, that's what's happening there. I think what you can see here is that some say, Rachel Reeves is fighting for her political life. And I think that is true. Certainly, we've seen, problems with the UK economy. It's not looking good. Job vacancies, a number of job vacancies in the UK is now stands at just over 700,000. Where's the figure here? Yeah, 736,000. But you can see it has been high. There's been more jobs around. It's been over 1 million. I can certainly remember times when there was over 1 million job vacancies in the UK and they were having to hire people from abroad, etc. But we now see a situation where companies are not hiring so much. They're laying people off, or they're not hiring. Recruitment has gone into a nosedive. And this is because it's a lack of confidence in the economy, business confidence, and the fact that we've got one of the highest corporation taxes comparable with France in the Eurozone. Ireland has got half the rate of corporation tax to the UK. And then we've got the increased cost of employing people by extra national insurance, which has definitely had an effect on jobs. So I think no wonder Rachel Reeves is worried about her job. I think Keir Starmer would do better just to get rid of her. Personally, I think she's completely out of her depth, as are many of the ministers on the cabinet at the moment. So we can see here, jobs not looking good. Companies that I spoke to are outsourcing jobs or just turn into AI. This could be the trigger that forces companies to look at AI when it starts to become expensive to recruit and hire people. Maybe then they start seriously looking at how they can automate and do things without people, or they outsource to call centers abroad. And I was recently in the Philippines, and you can see a massive boom in these offices which are used for outsourcing. And it's not just backroom admin, but it's all sorts of it's call centers, it's handling calls, it's IT support, it's all sorts of things. And they're doing a pretty good job of it, but it's actually booming now. You've got whole buildings in some cities which are dedicated to 24-hour round the clock call center and admin support for various countries around the world. And you know yourself, when you're ringing up about your gas bill or BT, you are speaking to someone in another country, which is a shame because Britain is losing so many jobs. And we know that a lot of millionaires and billionaires have left the UK because of the tax situation. And I think, the UK could do a little bit more. They could perhaps bring back those non-DOMs, get rid of that idiotic plan to start taxing non-DOMs on income that was never derived in the UK in the first place. And, otherwise, people like Lashmi Mittal, one of the richest men in the country, who's employed tens of thousands of people, will just continue leaving or setting up businesses overseas. I heard a couple of big IT firms that are now moving on to America from the UK. So it's a serious situation. It shows that we could be in a sort of terminal decline if they don't get their act together. And when I'm abroad and I speak to expats, this is the kind of thing they're saying. They're saying, well, it does seem like that the UK is finished. I don't think it's completely finished, and it's still a major economy, but the way the government's running it, things are looking bad. Look, Britain loses 276,000 jobs since Reeves' tax raising budget. Now, you won't hear that from, the likes of the BBC here, but, the media abroad are looking at the UK and saying the UK is in trouble. So that's a big loss of jobs there. It's 250,000 or more jobs have been lost since the tax raising budget of last year, which is crazy situation. Why is she still in her job? I just looked at another forecast, which is the manufacturing confidence. These are companies who are regularly polled on their confidence. It fell to minus 33 in April of 2025. And it's just not good. So how can manufacturing have confidence in what's going on in the UK? And also the cost of electricity and energy in the UK is ridiculously high. And we've got to do something about that. So those are the figures we looked at. As I said, economy shrunk in April. If it shrinks for 3 quarters in a row, that will be signs of a recession. We will be officially in recession. Let's see what happens over the next couple of months. Perhaps the government will do something to tweak those figures. Finally, just wanted to talk about Japan. Many of you may have heard, and I've talked about this before, that Japan's debt crisis is spiraling out of control. As of early 2025, the national debt to GDP ratio stood at 263%. In the UK, it's just under 100%. I think it's similar in America. 263% is very, very high. And it does sort of threaten to bring down other economies. You might think, well, what does it matter what's going on in Japan? Well, Japan has been in a problem for the last 40 years. At one time, I remember in the 80s when it looked like that Japan would overtake the US as the leading economy in the world, and their cars were everywhere. They were in America, buying up buildings, setting up car manufacturing, and it looked like they were really going to take over the world. They were all over the place. They were buying buildings in London, and then things went wrong. Their stock market collapsed, and it hasn't really recovered in the last 40 years. And Japan then famously reduced interest rates to 0% and even at a negative at one point in order to boost the economy. So they can't keep doing that. They can't cut rates anymore. And in fact, now they need to keep issuing more debt to pay the interest on the existing debt, a bit like the UK. But in the debt auctions, people are not buying their debt. So they're having to raise interest rates to over 3%. So that's going to be a crisis. They will also start pulling their what Japan has been doing is investing in other countries' bonds like the US, and there are signs that they could start selling those on the big scale, and that would cause problems for the US and Europe and the UK. So just keep an eye out on that. Let's see what happens to the situation in Japan. with regards to my money course, I've mentioned that earlier. I just want to tell you a story because many people think, well, money management, money courses are only needed for people who haven't got any money, but that's not true. A lot of high earners do not manage their money properly. And I've talked about this on many times about when I was a financial advisor. I had people that earned a lot of money but didn't manage it, and they were always in debt. And if at any time they lost their job, they could very quickly lose everything. Their house would go, their car on finance, and the wife's car on finance would all go within a few months. So they didn't manage their money. And I've been reading a book recently by Al Pacino. I think it's called Sunny Boy. It's well worth it. It's his life story, and I look at that on. I get that on Audible. I recommend Audible, the app, which is part of Amazon, where you can get an audio book per month for about £6 or £7 a month. You can get an audio book a month. So I listen to biographies. I listen to books on business and all sorts of things. And one of them has been Al Pacino. I was on a long flight, so I thought I'd listen to that. And Al Pacino has earned millions in his lifetime. Don't quote me on this, but I think it's certainly more than 50 million in his lifetime. Of course, star of the Godfather films, and now my mind's going to go blank, but many other films, Scarface, and many more that I can't even remember, The Sensible Woman, and so on. But he went broke actually twice in his career. He went broke, almost went broke. He didn't actually go into bankruptcy, but the first time he thought, and the first time was basically because he was investing his own money into films and not controlling his money. And the second time he nearly went broke was pretty much the same reason. So he hadn't even learned his lesson. So at the height of his fame and fortune, and he ran out of money. He's living high on the hog, as he says. His running costs, his living costs, listen to this, were somewhere between $300,000 to $400,000 per month, flying around in private jets. He always said, well, I'm not sure whether I'm going to settle in California, settle in New York. So he would rent a house, right? So people think, yeah, rent a house, what, for 6 months, a year? No, he rented a house for over 20 years in Beverly Hills, a huge property with a pool and multiple bedrooms and that sort of thing. You can imagine what the cost of that would be. I mean, $10,000 a month. I mean, I would just like to be Al Pacino's landlord, because his landlord obviously got rich as the price of those properties went up, paying that rent for 20 years. And he admits that that was clearly a silly thing to do. He once flew his family and all their nannies and his staff and all that sort of thing on a private Gulfstream 500 jet to London, took out an entire floor, rented out an entire floor on the Dorchester, every room on the floor. And he was stopping off in Denmark and seeing shows and all this sort of stuff. So he was really, as he said, living high on the hog, but he wasn't controlling his money. He was earning money, but I mean, yeah, he did have a crooked accountant. That didn't help, but he took his eye off the ball. His accountant was actually an accountant for celebrities who later served 7 years in jail for running a Ponzi scheme. But, you know, you can blame the accountant, but also he was losing track of his income. He wasn't keeping a track of his income. And this is what I talk about in my course. And then he was putting money into self-funding, loss-making movies that sometimes he never even got to show. But the main problem, he said, was not paying attention to his finances and really, I think, failing to invest in anything, pensions, property, the stock market, even index funds. He didn't do any of that. He just went out and earned money, didn't think about it. It wasn't important to him. And he said the amount of money I was spending was so effing crazy. And he called it a montage of loss. And then he goes in to explain that, you know, when you hear of a movie star getting paid 10 million for a movie, you don't actually get $10 million. You've got lawyers, you've got agents, you've got middlemen, you've got all sorts of people with their hand out. And then the government take their share. You're lucky to end up with, say, $4 million. That's still a lot of money by most people's standards. But, you know, when your living expenses are that much and more a year, you can see how things can get out of control. And that's just covers his living expenses, let alone what he's putting into these art house loss-making films. And gives other examples. He owned 2 cars, but was somehow paying for 16. Basically, when things hit rock bottom, he got someone in to start looking at things. He got a lawyer in and that sort of thing. And he said, why am I paying for 16 cars? You know, why am I paying for like multiple cell phones? and 400,000 a year for a landscape gardener on a house that he didn't even own. So I don't know where that came from. So he had all these hangers on around him, and his staff list grew and that sort of thing. And the list goes on. He said he wasn't even writing his own checks or signing his own checks at one point. So the money was just draining out like a leaking pipe. And of course, there were hangers on who took advantage of him. And it just seemed, as he said, the more money I made, the less money I had. So look, you don't need to be a movie star. You don't need to be Al Pacino to start looking at these issues. Best not to get into that situation in the first place. Fortunately, with Al, he could then get back into work and earn, $1 million here and $1 million there. He started doing TV commercials and TV work and earned a lot of money from this. Whereas before he was like, oh no, I'm a movie star, I'm a theatre star and that sort of thing. But then he said, well, he admits he did some bad films and bad movies for the money. He said, we all got to eat, as he said. But managing money is important, whether you're making 10,000 a year, 100,000 or $100,000 a year or 100 million. You've got to learn to manage your money. And look at my course, Smart Money course. It's SMART: spend, manage, accumulate, review, and track. And if you follow those rules that I put down, they're basically laws of money. I don't make the laws; they just work. They just are. And then I go into, if you follow those laws, you will learn how to manage your money. First, we get control of where this money is going. And then I look at investing your money, making your money grow over time so that you don't end up broke after 40 years of working, which many people do. In fact, millions of people in the UK are dependent on the state after 40 years of working. And I think it's going to get worse because job security is not there anymore. So we want to make sure that you are putting something aside in the right area so that it will grow, not just in the bank sitting there earning nothing, but into assets to make sure that grows. And I look at stock market, I look at gold and silver and property. So we look at all those things in the course. So check it out on the link below. And I'm doing a special offer on this at the moment. Things will change because I'm going to move on with this course and revise that, and then the price will go up. So have a look at that while it lasts. It's a very reasonable price. I think the amount you would pay for that would be you'd get that back immediately just by following one of those rules and getting control of your money. You would get that back almost immediately. So thanks very much for listening, and I will see you again on the next episode. Bye for now.